All right, good afternoon, everybody. If you don't mind, let's just do a quick audio video slide check here. Let me know you can see, you can hear. You see the slide that I've got up here. Okay, looks good. Yeah, let me get to the, let me restart that. All right, there we go. You guys should see that now. All right, perfect. All right, looks like we're ready to go. So again, welcome everyone to this presentation hosted by FFR Trading. My name is John Madison. I'm the senior strategist here at FFR Trading, and I'll be your host for this special presentation with the Rob Ebels team. Discover the secret to six-figure slide trading. You should see the risk disclosure here. I think you're all aware, right? Trading is risky business, especially if you don't know what you're doing. We at FFR exist because most people fail trying to do this themselves, which is why we pair you with proven traders who have proven track records and diversify you among them to try to help mitigate that risk. All right, so what we're going to be covering today, well, first we'll review here who we are at FFR and what we do. We'll talk about who Rob Ebels is, his background. We'll look at the trade academics of the program, the performance since its inception. We'll focus a little bit more as well on some of the recent trades. I'll introduce you to the portfolio manager, Jake Davis, for the Rob Ebels team. And we'll have a little Q&A. Rob will do a presentation, kind of introduce you to the strategy, how it works, how he manages those trades. We'll have some Q&A after that. And then we'll go over the all the educational material that comes with the program, everything that comes with the signals and everything there. And we have a great offer for you guys today for those that stick around to the end. All right, so who are we here at FFR Trading, right? And what is our role? First, FFR is a boutique due diligence firm, right? What does that mean? You can do your Google search to, figure out if this trading strategy is any good or whatever, but you're limited. FFR Trading's due diligence process is better than that simple Google search because it involves multiple steps to thoroughly evaluate a strategy, developer's qualifications, the efficacy of their trading strategy, right? And we have access to resources that you and Google don't. So firstly, if I've got them up here. Okay, I'm just going to go through some of the points here quickly with you guys. FFR requires that the strategy developer is referred to us by a trusted third party. And that sometimes could be, a brokerage firm. It could be from another trader. Next, we attempt to work with developers who have been licensed with the various regulatory bodies. It just indicates that they've met certain standards and requirements to operate in the financial markets. Third, the developer has to complete a complete application detailing the information about the strategy, the rules, the performance. We verify the effectiveness of those trading rules in the current markets. Fifth, the requirement is at least 15 years of actual trading experience. And we're looking for what we call a mentor's mentality, somebody who is not only a great trader, but somebody who can communicate that information and teach and pass that knowledge along. Next, we get a back test requiring 5+ years. Again, additional evidence of the strategy's performance over a variety of market conditions. And then we look for real brokerage statements. So we get the brokerage statements going back as far as we can from the trader and that strategy. And the final step is we launch that strategy in a live market. That helps to ensure that the strategy performs as anticipated, in real world settings before FFR commits to offering that service to our clients. So, all these steps just show that our due diligence process is much more thorough and rigorous, than a simple Google search that you might do. And, who knows if you can trust what you see, through a Google search anyway. And that just helps ensure that we're working with high quality developers and trading strategies. All right, now let's get into Rob Abels. Who is Rob Abels? Well, Rob started trading in high school. He had overheard his dad talking about buying call options on Intel, and he decided to do the same and basically doubled his money. And that really changed the course of his life. He becomes a professional trader around 1982, joined an energy trading desk, managed funds for the company's proprietary account. From there, he went on to create a private trading group and managed more than $50 million with the funds primarily coming from the likes of like Dean Witter, Merrill Lynch. In 1997, he decided to retire, but at some point after that, he has this breakthrough, we'll call it, with this slide pattern that you're going to see today, combined with options. And he gets back involved, goes on to consistently generate annual profits between 50 to 100% on average. I'm going to go ahead and bring in Jake Davis. Jake is the portfolio manager for the Rob Abels trading team. So Jake, if you are there, I think you guys can already see him on your screen. Jake, go ahead and just test your mic. We'll make sure that's working.
Hey, can you hear me all right?
Perfect.
Awesome.
So Jake, just tell us a little bit how you got involved with with Rob Abels.
I've had the opportunity to work with Rob for the past half decade, and he took me on while I was actually back in college studying mathematics. He had me on as an intern, working with him and kind of continuing to help develop his strategies and use my math background to help him code his indicators and help continue to develop his slide system. So that's kind of where I got started with him. And then when over time, after continuing to learn from him, from his strategies and such, and becoming more familiar with it, he began to trust me more and more to help him manage his system, which I'm extremely thankful for. And here I am today, presenting the system to you guys with the pleasure of doing so.
All right, fantastic. And we're really happy to have you, and we're excited because the results that we've seen from this program have been fantastic, and our clients that have gotten an early peak are quite happy and satisfied with this. So let's get into the program. First, we're going to take a look at the performance figures. Now, this is based on a $10,000 account size, and I believe, Jake, that's the minimum account size that you guys recommend to trade with this service. Is that correct?
Yes, that's correct.
Right, and you're allocating no more than $1,200 per trade, it looks like, and these are non-compounded numbers. So we're only risking $1,200 on a $10,000 account size for each trade here as we go through. And these numbers are from January of 2018 through March of 2023 here. And in that period, that $10,000 here turns into a net profit of $170,477. That's a 1,705% return on capital. Pretty phenomenal numbers. Your annual return, the average annual return over that course was 327%. And a lot of people like to look at the monthly average. It's averaging 27% per month, right? So on a $10,000 account size, you're talking $2,700 a month in profit. Again, pretty phenomenal numbers. But the amazing thing, Jake, when I look at the numbers is, when I look at the win percentage during that period, you're hitting 78% winners during this period. But the average winner, right? Normally when you get a high win rate like that, you're expecting a lot of small wins. But your average winner is $797 here. The average loser is just $241. Talk about that kind of risk reward that you've got going here, and the high win percentage. That's like the best of both worlds.
Yeah, we I mean, like you said before, Rob has a vast amount of experience trading in options, and he's had the opportunity to trade in every market, and the market's always changing, but he's had the opportunity to get, you know, both bad and good experiences, and he's learned from each and every one of them. And one strategy he picked up was closing out of half of the contracts in a trade. Oftentimes he'll recommend closing out half the contracts and securing a win, no matter what, from a trade, and either letting the other half go to zero or letting the other half run and continue to generate profit until it reaches the system's second generated target. Because of that, that's what allows the win to loss ratio to be so different, as well as the average loss being so different from the average win.
Yeah, like I said, it's phenomenal. I mean, I've been doing this for a long time, and to see numbers like that, you know, people would die for those kind of numbers. So I'm going to just dive into, so folks can kind of see what you're trading here. So, you know, if we look at some of the stocks or the underlyings here, you got Western Digital, Halliburton, Schlumberger, Ross Stores, Duke Energy, Ford Motor. So we're talking big name companies, very liquid, I'm sure pretty liquid options. And you're trading both calls and puts. So you guys play both sides. Talk about that a little bit, about you know, your kind of watch list and how you guys can trade in either direction.
Yeah, so one thing that makes our system unique is we're constantly generating a new list of symbols. We don't trade every stock in the S&P 500 because not every stock is going to be tradable. Very often, I'm going to get into this when John passes me over the baton, but we're going to talk about how we evaluate our option list and refresh it to generate the most tradable signals possible, so we're able to constantly track the stocks that are moving and making those moves that we want them to make, both up and down, and being able to take advantage of both worlds.
All right, excellent. And I've kind of gone through here now. I'm looking at the end of December of 2022 here, and the account, again, non-compounded, was sitting at $160,000. So if we kind of go through this year's trades for 2023, now we see the account at $170,477. So basically, if you started with $10,000 in January, you're up 100% for the year at this point. What have you seen in the markets, Jake, that allow you to do these kind of returns?
Well, since the COVID pandemic, volatility has been rampant. Obviously, if you look at a chart of the SPY month to month, you'll see that as soon as 2020 hit, you'll see the bars get a whole lot bigger. And because of that, that means, you know, obviously way more opportunity to make a lot more money. So based off of that, like I said before, since the system is built to take advantage of both bull and bear markets, we were able to take opportunities that in previous history we wouldn't have been able to take. And just like in previous history, we wouldn't be able to make as much off of those options. So like I said before, because we're able to make money off the market going up and down, we're able to generate a pretty successful portfolio.
And guys, think about, you know, what these kind of numbers would do for your account, whether you're trying to save for retirement, whether you're trying to generate monthly income to supplement, your monthly income, think about what these kind of numbers might do for you. And we'll talk about the educational part of this as well. If you're trying to learn a strategy, this is a fantastic way to do that. So there's the numbers there. All right, so what I'll do, Jake, is I'm gonna get ready to turn over to Jake here. So Jake's got some stuff he wants to show you about the program, some of the indicators that they're using, a lot of great stuff. So I'll get ready to hand over to Jake, and when we come back, have your questions ready, guys, because we'll do a Q&A with Jake. So whatever questions that you have for him, he'll go ahead and answer those for you. All right, so Jake, I'll go ahead and pass this over to you.
All righty. All right, let me make sure that I'm sharing the correct screen. All right, everyone see that all right?
Yeah, I can see your slides. I can hear you perfect. So you're
all right,
you're good.
incredible. All right. So once again, thank you guys so much for taking the time to learn about this system and learn about how profitable it can be for you guys. So once again, this is the six-figure slide system. Moving in, just to give you a brief synopsis of the system. So what the system does, and like I said earlier, it takes advantage of the market moves early. And what I mean by that is that we're able to, you wonder how these big institutions are able to take advantage of these moves that the normal everyday trader isn't able to take. This system is designed to trade like those big traders do. And that's why we're able to have such a high win ratio. Not only that, but it also determines the best time to enter and exit trades. And this is through the, taking advantage of the swing highs, swing lows, support and resistance areas, or the failure of both of them. And the system is able to take advantage of the moves depending on which direction the market is heading at that time. And through this, it's able to maximize the gains and minimize the losses. Like I said before, we close out of half of our contracts oftentimes that are winners. And what this is able to benefit is able to essentially make a trade that we know is going to be a winner no matter what. Because the other half, we're exiting if it breaks even. Either that or we're exiting at a win. Those are the only two options that we take whenever we exit half of an option, which is oftentimes what we do. So moving into the key factors, these are essentially what the system is based off of, or built off of. It's built off of tops and bottoms, or as a lot of everyday traders like to say, support and resistance areas. And they're essentially a series of swings of highs or lows that connect through a horizontal line and indicates support and resistance areas. Trend lines, which indicates a series, which is indicated through a series of swing lows or swing highs that are connected through a horizontal line, or a diagonal line instead of a horizontal line, like I mentioned previously. And this also indicates where the support and resistance areas are in a stock. And lastly, and this is the bread and butter of the system, the last wave, which is a series of swing highs or lows, knows a pattern. But instead of using momentum to calculate a shift in price action, which allows the system to tell us which direction the stock is going to go, either bull or bearish. Like John emphasized, we do both long and short, so we take advantage of both puts and calls. And the consistency that we trade off of is around 4 to 8 trades a month, or 1 to 2 a week. And this all depends on the current environment in the market. If so for example, this week is a big earnings week, such as last week. Other factors, but on average, we do about 1 to 2 a week, or 4 to 8 trades a month. And as John stated previously, the recommended starting account size that we recommend is $10,000. However, you're able to invest however much you're comfortable with, but your results may not reflect what John was just showing. And we do recommend around $1,200 per trade. Okay, so going back, let me go back a slide real fast. You look at the first 3 bullet points, the tops and bottoms, trend lines, and last waves. I'm going to give an example of every single one of these in order and explain what I mean and show a real trade that we did that and it basically leads you through the process and explain how these strategies were applied to these stocks through our automated system. So first off, I'm going to give you an example of a trickle top as well as a declining trend line break. So right here we have Seagate Technologies, and as indicated, let me see if I can get pen ready. As indicated by these black arrows right here, it's showing a bounce. If you notice, every single time it hits that horizontal line, it bounces. It bounces 3 times. After the second bounce, that's when the strategy picked up a signal for a double top, and it told us, it notified us, hey, we need to keep an eye out for this stock. Once it gets up to that area again, we need to take action. So on December 13th, that's when it hit that support area, or sorry, resistance area a third time. Once it hit that resistance area and it showed a negative bar, which basically indicates that it's responding negatively to that resistance area, which is a good sign for call or for put options. That's when we executed this trade. And after, I want to say 7 days, on December 20th, it continued to trade down in a declining pattern, as you can see right there, which essentially is a declining trend line where it touches multiple points, as illustrated. I'm gonna do my best to illustrate it. On December 20th, that's when it had a positive bar and connected to that declining trend line. Once it showed a positive response to that trend line, that, as you can see, is when it broke through. Once it broke through, SDX began to tread to the side for a little bit, which which gave us the confidence that the strategy was able to pick up the system. Now, as you can see from this, I forgot to mention this. As you can see from this rectangle box right here, let me see, I don't know if you can see my cursor, but as you can see from this rectangle box right here, this is a range. So this is essentially what a support area would be. If you can tell, as soon as I hit that support area, that downwards energy quickly stopped. So just to give you a brief overview once again, we entered on December 13th, which is this bar right here, and we exited on December 20th, right here. And once again, the automated strategy allowed us to know when to enter and exit. And the net profit for this trade was $988 in only 7 days. So moving on to the next example, we have Skyworks Solutions, which is a trade that we executed last year, actually, on July 5th. This is an example of a double bottom as well as a trend line break. So as you can see, much like the previous example, this would be support area. So you can see, illustrated by the black arrows right here, it bounced off of this area twice before the system was able to pick up a signal letting us know that we need to start looking for call options. On the close of January 5th, which is this bar right here, you can see a massive move. That essentially allows us to know that we need to start looking for a call option, and it's going to start moving up fast. At the close, once again, we executed an entry, and how we were able to figure out when we were going to exit is, if you see, once it traded up and it created another swing low right here. Once it bounced off of there and created a positive bar, another massive bar, that's when we knew that it was going to begin following a trend. Once again, it followed this trend for a while, created another support area right here, continuing to trade up. And if you notice, on this bar right here, this is what we call a doji bar. And a doji bar is essentially a bar that opens and closes on the same exact spot. That essentially lets us know that the rally, such as the rally that Skyworks has in this example right here, is over. Once that happened, we closely monitor it, and then the system let us know whenever it broke through, which is where it opened right here. As you can see, once it broke through, it dropped fast. So at the open of that day, that's when we exited this option. And once again, this was a call option, but the profit was, we exited on August 9th. And the profit for this call option was $1,305. And that was in a month's time. So Whereas STX before, we only held for 7 days. Skyworks we held for a month, and that goes to show that these kinds of trades can last anywhere from say 3 or 4 days to a whole month, and we're still able to maintain the reliability of these trades and able to monitor them for this long, and they're able to make these kinds of moves. This shows the power of these double bottoms. You can see after it bounced off of that support area down right here. Let me see if I can find my cursor. Once it bounced off of there, it just flew all the way from sub 90 all the way up to around 115. So moving on. Here's an example of a trend line trade. Now there's a lot going on in this example right here, and this is just to reemphasize on what the system does. The system, which we've coded it as a custom indicator, draws all of this for us and gives us a signal that we need to be able to closely monitor and determine if it's a good trade. So looking at Qualcomm real fast, this is a trade that we executed on March 14th. And this is a good example of an ascending and declining trend line. So at around, let me see, right here is when the system picked up the signal as a swing high. Once it created that swing high, we noticed that it created an ascending trend line going all the way back from the beginning of December of last year and then continuing onward. Once it created that swing high, we watched it as it continued to drift all the way down to that trend line once again. And as you see, once it bounced off that one more time, it's almost just like when you drop a ball from, like a bouncing ball from like the height of your head. It bounced off and continued to fly up from there. That's when we continue to monitor this declining trend line, whereas it connected in multiple points, as you can see. It broke through right here. And this is when the system picked up an entry and told us you need to start looking for call options. Once it broke through, it continued that upward momentum and gave us the confidence we needed to be able to know that this stock was going to start going. We entered at the close of that day, and then we closed this trade 7 days later on March 21st, just a few days later. And as you can see, this is an illustration of another resistance area. Right here, let me see, you guys can't see my cursor, I don't think. This line that continues to go sideways. This is evidence of another resistance area. And as you can see, Qualcomm continues to stall out in that area. Once it traded up to that area, that is once again, this is drawn by the strategy. We continue to monitor Qualcomm before it ended up going to that area. And that's when we knew, hey, it's time to exit this. There's not a lot of energy left. We need to take what we can have. And in just 7 days, we were able to make $320 off of this option. All right, so last example of a win, we have Nucor Corp. This is an example of the last wave system. So as you can see, it takes advantage of the swings in a stock. We have A, as illustrated in this picture. We have A, B, C, and D. The system draws these swings automatically and detects them. It tracks hundreds of stocks that we give it, and it lets us know when it generates this fourth swing, which is this D. In order for a last wave to set up, it needs to have 2 swing highs and 2 swing lows. Once it has that second swing high, it continues to watch it. It lets us know that it has that fourth swing high, or second swing high, I'm sorry. But it lets us know that we need to watch it. Now, I don't know if you can see this, but right here, that rectangle, that's the entry. And that's what we call a money bar. A money bar is a calculated move in share price after that fourth swing. And this calculation is given in the manual that our new subscribers get, that you'll be able to calculate yourself and know, hey, this is a money bar. This is when I should get in. On that fourth swing, that's when the system let us know this is a money bar. You need to start looking at put options. So we entered into a put option on December 9th on this trade. And as you can see, the energy it created was monumental. That massive drop right there where it just plummeted straight down. And let me talk about this bar right here. when it moves back up. When this happens, we begin to monitor the trade and be like, okay, this trade might not work out. We need to get ready to exit if it turns bad. Our exit would be that D right here. That's where we would exit the trade. If it trades up to there and is closing above that D, we need to get out, because that means that the momentum failed and that swing isn't a real swing. However, in Nucord, as you can see, plummeted after we bought a put option. And in only 7 days, on December 16th, we were able to make $1,185 off of this option. And what told us to exit was that first initial positive bar that occupied most of the band. This positive bar right here didn't make a big enough move. As you can see right here, that positive bar didn't occupy much of the daily bar. However, this bar right here showed so much positive energy that we knew that, all right, the drop had ran out. And as you can see, after we exited, Nucor continued to trade up. So once again, we were able to take advantage of this stock by trading it at the most opportune time and getting the most opportune price possible, while not taking the highest amount of risk, and also being able to exit at that bottom. All right, so I'd like to talk about a loss in our system real quick. One thing, if I'm ever talking to somebody about the stock market, I never listen to what they say. If there's so many people these days that talk about how much they've won in the stock market, how much they've won. They say, oh, I make $1,000 a day. Well, no, you don't. You made $1,000 in one day, and you like to say that you made $1,000 every day. And they only talk about how much they won, never about how they lose. I don't listen to a word they say, because they're lying. Everybody loses in the stock market. That 78%, that's incredible, but there's still 22% where these trades don't work out. However, it's how big the losses are that make the difference. Now, as you can see, McDonald's here. We executed this trade on April of this month, April 3rd, and that's demonstrated by this line right here. So once we got a signal from our system in McDonald's, from it trading back to that resistance area, sometime in the middle of that day, that's when we got into that trade. And we were like, okay, so if it closes above this point, that's when we know we need to exit. It's going to continue trading higher. As you can see, McDonald's closed. I don't know if you can see. I don't know if you can, if you have if it's a big enough picture. But as you can see, McDonald's closed above that resistance area. Once it breaks through that resistance area, it's usually going to continue going up from there. As you can see, McDonald's start flying. So on the same day, we exited that trade at only a $120 loss. Now, $120, that sucks. However, the amount that you could lose off of that trade is monumental. And this is part of our risk management strategy, or policy rather, is to make sure that we're not taking the risks that you really shouldn't be taking. I wouldn't risk my money like that. And we wouldn't risk yours either. It's not smart. Once it breaks through that, you're not going to sit there and say, oh, maybe it's going to trade back down. No, it's going to continue going higher. It's not worth the risk. You need to get out, take that loss. There's a lot more opportunity out there. See if I can find my cursor real fast. So on that note, let's talk about our risk management. So we have a 50% stop loss rule, or close to that, depending on where it opens up in the next day. Sometimes, you'll have a massive move overnight. That 50%, or the stock will close at around 30% loss, and then it'll open around 60% loss. Well, now we need to evaluate. We need to figure out, okay, is it going to trade back up to that 50% loss? And if it does, that's when we exit. However, if there's enough evidence given by the system that allows us to know if it's going to continue going lower than that 60%, that's when we take that 60%. So if you see on the historical trade record occasionally above 50%, oftentimes it's because it opened below that 50% stop loss, and there was no opportunity to take half. We have a calculated target determined by the system. So before we get into every single trade, we already evaluate where that stock is going to go and when it's going to get there. And that's all predetermined based off the system on the trend lines, the support and resistance areas. All of that are tools that can be used to calculate the target. And this is before we enter the trade. This isn't after. We don't get into the trade. We don't see an opportunity and we say, hey, we got to take this right now. We'll do the math later. No, we make sure that that's the right trade to get into, and it's going to make a big enough move to make it worthwhile. We only trade high volume options, so oftentimes we don't trade $4 stocks because it's not enough. There's not enough reliability there. There's not enough people trading it in order to get out of that stock at a timely manner. So because of that, you're not going to be stuck with an option that you're not able to get out of because no one's trading it. You will always be able to get out of that option. Depending on our trade recommendation, you will be able to get out in that minute if you follow the trade instructions. We're consistently updating our symbol list. So I mentioned earlier how we're constantly refreshing the stocks that we trade. We don't trade everything in the S&P 500. We constantly comb through that S&P 500 though. Excuse me. And we incorporate volume, spread percent, volatility, and so on into an automatic calculation that's able to let us know what are the most tradable stocks in the market at that moment. And this is something that we refresh on a bi-weekly basis to ensure that we're finding the most opportune possibilities that we can. We stay away from earnings. So like I said before, this is a big earnings week. So it was last week, this whole month, big earnings. We stay away from stocks that have big earnings reports coming up because trading a stock that has earnings coming up is essentially glorified gambling. It can go in either direction. It can be detrimental. Sure, you can hit home runs every now and then, but the risk isn't worth it. I wouldn't risk my money like that, and we wouldn't risk your money like that either. And that brings us to the last bullet point: no more risk than necessary. We understand that risks are necessary, but more than that, it's not. And because of this, because of the risk management policy that we have, we're able to be as successful in our portfolio and produce the numbers like John was showing. All right, so some closing notes. Our indicators are 100% coded. I wish I could recommend some indicators that you could use alongside us, but the only way to learn how we trade is to see how we trade. And because our indicators are 100% coded, it gives us a greater edge in any market. That's why our system has been so successful in all these different markets. Even during COVID year, we are still able to gain. Every single year, we've been able to generate profits in any market, and we're confident we're going to be able to continue to do so because our indicators are unique. They're something that the public doesn't have. And we see things that other people aren't able to see. And this is all these things you're able to learn about in our manual, in our book, etc. It allows us to take advantage of moves before they happen. So if you saw like how it was generating the A, B, C, D swings, the system lets us know whenever those swings occur and let us know, hey, it's about to hit a fourth swing. We know those stocks about to reverse. We got to get ready to take this opportunity so that we don't take it 1 day, 2 days late. But above all else, our number one priority is to manage our risk and keep our losses at a minimum. And that's built off of us exiting half of our options and guaranteeing profit in some trades, and us foreseeing big moves like McDonald's, for example. How $120 sucks, but imagine how bad it could have been if we hadn't gotten out of that option, if we had gambled. So that's about all I have. Thank you so much for listening to me and watching me draw on the screen for a little bit. Hopefully it was transparent. I'm open to answer any questions that you guys have, and I'll just make sure to stick around. But John, you have the baton back. Yeah, thank you guys.
Awesome, Jake. Yeah, fantastic stuff. I'll take back the control here. What I actually want to do is I actually want to go back to the performance summary here, or not the summary, but the trade by trade detail here. And again, I hope you guys can see my screen. Just give me a Y there in the text chat. Guys, make sure you can see my screen now. I've got the trade performance here. Okay, perfect. So I just wanted going to, so this was the last trade here, December 28th of 2022. So if I go through here, I'm just going to pick up some of the losses here. So you had a loss here that was on, it looks like Union Pacific, it was $108. All right, you had another loss here, $470. That one was on Starbucks. All right, these losses are pretty small when you compare them now. You know, you look at some of the profits that came through, $1,500 here. What was that, 654? You got another, you know, a couple $100 here, $748 here, $1,500 here. So these losses are pretty minimal compared to the size of the wins that you guys are producing. And I'm just looking at this year's numbers here. And if I go through the rest of the year here, there was one here, Norwegian Cruise Lines. Looks like that was what, is that 515 or 315? And a $150 loss here. This one was on Comcast. So I think we're talking 4 losing trades so far this year. I think there's a total of about 29, maybe 30 trades so far this year. 4 losses. I mean, and small, we're talking small losses. I mean, that's phenomenal. Like I say, I've gone through a lot of programs, and to see these kind of numbers is just, you know, kind of blows me away. And well, hopefully it blows you guys away too, especially if you can kind of compare it to what you're doing in your own trading here. But let's go ahead and get to the Q&A. So you guys, if you have questions for Jake, we'll go ahead and post them, and Jake, I'll relay these questions to you here.
All right.
And let me go through and see. All right, looks like Padma, where's your question, Padma? I know you had one there. How long is the holding time?
Holding time. So we trade monthly expirations because the monthly expirations oftentimes have the highest amount of volume. I mentioned before, you know, you make sure that we don't give you a trade recommendation that you're not able to get out of in a moment's notice. So longest term, normally we only we'll hold options for, you know, 4 to 5 weeks, I'd say is the longest that we hold it. But past that point, you usually reach time depreciation options because it gets closer to the expiration date and people normally want to pay a little bit less. So hopefully that answers that question.
All right, perfect. Yeah, and Tom from Ohio wants to know, can you start with a smaller account but trade less options, something like a $5,000 account risking 600 per trade? Is that plausible?
Yes, yeah. Our one thing that we always recommend, and if you notice from the numbers, you know, we have a, you know, starting account size of 10 grand and standard or average trade allocation of 1,200. That brings you around 12% of your account per allocation. We normally don't recommend allocating more than 12%, and even smaller the better, because, you know, less risk, and, you know, if the reward will add up over time. But yeah, no, the system is 100% tradable so long as you're able to fill at least one of the contracts that we recommend, which normally we don't recommend contracts over $550, but on average the contracts we recommend are, I'd say, around like $300.
Right, and that leads into William just had a question about how do you choose your options?
In terms of, are you talking, and if you're talking about the symbols that we use, then it's through the calculations, through the like refreshing the list. But if you're talking about the actual options, we're talking, normally we look at in the money for expirations. So we try to get as in the money as possible, because normally the volume, and by in the money, I mean as close to the stock price as possible. So for calls above, for puts below, we try to be in the money, or if the options are above $550, then we try to get as close to the money as possible. And we also look at, you know, spread percent and stuff, how, like, the percent of the bid and the ask and the mid price. And, you know, if it's a big difference, if it's a big percent, then normally we don't recommend that option, because it's harder to get filled at the right price, or even at a good price for that matter, because I mean it's how trading is. People are only going to pay as much as they're willing to pay. So we incorporate that, and we also incorporate Black-Scholes formula, which it calculates theoretical option value and incorporates volume into that. So as a matter of fact, as the volume goes up, it's contrary to supply and demand, actually, the price of the option also goes up. But so it's a double-edged sword in terms of like getting filled on the option with good volume, but also paying more for the option. But I kind of went off on a ramble for a second, but the three key takeaways are, monthly expirations in the money, good spread percent, and below $550.
All right, nice summation there. Carolyn wants to know, are the option trades spreads or singles? I think you guys are just doing straight puts and calls, correct?
We're just doing straight puts and calls. We're never going to do spreads and put you guys in multiple legs and such, and end up holding trades like that for months on end. So we keep it simple, just just single trade puts and calls.
Okay, and Sheila wants to know, will I need to be glued to my computer to follow this?
So we actually send out text notifications if you enroll in that upon subscribing for the service. We send out text notifications that will notify you to check your email and look at the alert that we send out. Past that, there are brokerages, from what I understand, that are able to auto trade for you that also receive our alerts, so that you're certainly able to opt into that. And oftentimes you're able to take better advantage of the system through that, because they normally get better fills than say most individual traders are trading. The only caveat is that they have more lots to fill, so sometimes you may get a better fill because they're trading at tons of accounts at once, so they're just going to get the best price they can get, whereas you're trading one, so you might be able to get a better price. It goes both ways, but no, you do not need to be glued to your computer. Text alerts are extremely helpful in that.
Yeah, and guys, we'll go through everything that comes with the service, including those text alerts and email alerts. Let's see, Padma wants to know, how many open positions do you hold concurrently?
Concurrently, we don't normally hold more than 5 or 6. I say 5 or 6 because we don't ever normally hold more than 3 puts or 3 calls in today's market. Now, on the historical trade record, you might see the results being displayed differently because it was a different market. But for today's market, because of the volatility, we like to take advantage of both stocks at once. And oftentimes, a stock that moves against the index it trades in it's a sign that that stock is stronger than that index at that time. So if you ever see us buy a call option in a bearish market, and you see, okay, so why, everything else moving down, why are you buying call options in this? Well, it's because that stock is moving against the market. So to answer your question before I start rambling again, 6 is usually the maximum amount of positions that we'll allocate.
All right, perfect. Henson, yes, you can email us. I'll give you the email after, support@ffrtrading.com if you want the replay of this. Russ, we'll get into the details of the program here in just a moment. James wants to know, can you use this for individual stocks as well? So in other words, if they just want to trade the stock or the underlying and not the option, is that viable?
Yes, so stocks are normally longer term, and stocks are only long. So for our long positions, you are able to trade with the system. However, for shorts, for puts, you won't be able to take advantage of those, unfortunately. But if you just want to remain in long positions, then absolutely you can take advantage of this system for stocks as well.
All right, and Ryan wants to know how you find your trades.
How we find our trades. So once again, our indicators are 100% coded by our analyst team, and part of the code is that it notifies us. So we have sometimes hundreds of stocks to look at, and oftentimes we go through each one. But the beauty behind this system is that if we're too busy managing the system, we miss something, the system lets us know, hey, you need to look at this. It points it out. It's basically it instead of finding a needle in a haystack, it's a magnet. It tells you you put it to the haystack and it brings that needle out for you. And that's one reason why the system is so successful, is that our indicators are a magnet. It tells us what stocks are good and lets us know what signal it is, how we need to trade it, where it might go, and essentially how to maximize the profit in that stock.
Well, I think I could use that as well. I'm sure, you guys. What do you think? I think everybody could use something like this. Are these defined risk trades? Glenn wants to know.
Defined risk trades. So risk trades would essentially be, like I said in the presentation, trades that have earnings reports coming up, or trades, taking on positions during a week that big inflation data points might be coming out. Like today, for example, we had the jobless claims comes out. That's an inflation data point that people use, and the Federal Reserve announcements, seeing that holding positions over the Federal Reserve announcement is, as of the past couple of months or even up to the past couple of years, usually high risk, because you see massive moves in the market, because the market moves with fear, and people see the Federal Reserve put pressure on these banks with raising interest rates, and pressure on the public in general, and people react to that. Just reactions in the market, and trading before those reactions come, when you know that they're coming, such as the Federal Reserve minutes being released and such, that's a high risk trade, and that's something that you won't really see us do, because it's not worth the risk. And if that number, right now we're at, I think, 170K in profits. That number is not going to continue going up if we take those risk trades. So I know you only asked if, like, what defines a high risk trade, but I sewed that into our risk assessment policy. But hopefully that answers your question.
Okay, and then James is wanting to know, and we'll talk more about this in a bit, but maybe you could touch on, he said, I've never traded options before. What kind of training is provided?
For options trading, so what we provide, and this is something that we take pride in, is this isn't just an advisory service. This is an educational service. We don't want to just give you trades and expect you to just follow us blindly. Every single week we release a market wrap where we outline exactly why we're getting into trades, why we're getting out, what told us to go look for these trades. And in terms of trading options, so it can be intimidating at first, with strikes and puts and calls, expirations, limits, all that sort of stuff. For options, we make sure to keep a constant support line open through our support email, along with making sure that we provide an educational pamphlet to new subscribers, which is in the works, that we will, and also in the book, it also explains options in very, very strong detail, and it outlines what is a strike, what does it mean, what expiration is there, which expiration to get, limits, etc. Basically outlining exactly what our trade orders mean, so that you're never confused. But if you ever are, then we are always open to questions. We don't hold secrets.
Okay, and then Robert asks, and this may be one I can answer, with all those following your trades through this service, do you notice it has an impact on the pricing? So just to let you know, from our standpoint here at FFR, we do have to limit the number of subscribers to these services for that very reason, because if you have everybody taking the same trade, you can show up on the big banks' radar, right? And the big banks, you can trade against it. So we don't want that to happen. So we do limit the number of subscribers, guys, to these programs. But yeah, good question there, Robert. Let's see. And yeah, Michael will talk about what you can do to get started here in just a bit. Let's see, Edward asks, are the alerts end of day for the next day entry or exit, or during the day for immediate execution?
No, unless specified otherwise, all of our alerts are good until the end of the trading day. So we never recommend to get into an option the next day, because oftentimes you're not going to get it for the same price. So chasing, if you miss a trade alert, we don't recommend chasing it. Otherwise, it's going to hurt your account, and your results aren't going to reflect like the official trade results that are intended for this service.
All right, and Ian, yeah, I'll give you the email in just a bit, Ian, so that you can request that. John wants to know, why not trade C to D move also?
Why not trade C to D move? I'm sorry, I don't know if I completely understand that question.
I'm guessing your pattern, the pattern portion of the program that you guys trade. I guess he's.
So you're asking why we don't incorporate that strategy into our system.
Right.
There's a number of other things that we incorporate into our system. However, there's certain strategies don't it's kind of like oil and water. Like certain strategies don't mesh well with others, and some strategies are only useful in stocks, and other strategies are only useful in options. And I know it trades on the same plane. However, options trade very differently than stocks do. So I get this question a lot, why we're not using longer term indicators or different indicators that are popular amongst people who trade in the stock market, not the options market. Why don't we incorporate that? Well, because it's not as useful. It's not as useful to us because it lets us know where a stock is going long term, but in the short term, it doesn't really provide too much. And that's where our strategies come into play, whereas our strategies are for both the short term and long term, but they're extremely powerful in the short term. So it's kind of just a checks and balances, just figuring out which strategy gives more of an impact in the short term market. And I hope that kind of answers your question, that that the CTD doesn't essentially affect us short term, and it doesn't mesh well with our strategies that we currently use. So I hope that kind of gives you a better idea of why we try to isolate our strategies, but we also don't have blinders on either. Like, we understand those do impact the market, just not so much in the options market.
Yeah, exactly. And you can't catch everything, right? You just can't catch everything. You've got to focus on what you focus on, and what you get the probabilities in your favor, and stick with that. So, all right, guys, let's move forward, because a lot of you guys are asking, about the service, what comes with it. So let's get into it. This is what we call a learn and earn program, and that means that you're going to get direct access to the trading team. Any educated questions that you have regarding the markets, the methodology, right? You can contact the Rob Abels team directly, and they'll answer your questions. You get the trade alerts to your email or your cell phone, right? So you get the text. That'll give you all the instructions on how to place the trade, exactly what the trade is. If it's set at a limit price, all that is going to be in that trade alert. So you can basically copy and paste that to your own broker and enter that trade yourself. Or, like, we do offer the access to third-party registered brokers if you're interested in that. We'll talk about that in just a second. You get the daily recaps for the trade updates. In other words, everything that's been open that day, any new trades that have been open, any trades that have been closed that day, what you're currently holding, any open positions there, all that you'll get a snapshot of. So you always know what's going on in your account. The educational material on the methodology, describing the entry rules, the exit rules, and the money management rules. So maybe, Jake, just talk a little bit to that, about the educational piece. I know you talked a little bit about it in one of the questions that was asked there. But in a sense, what are they going to get? They're going to get the signals, but they're also getting some educational material. So if they want to learn the strategy, they can do that for themselves, correct?
Correct, yeah. So I mentioned a manual earlier, and the manual essentially outlines everything that I talked about, but in much greater detail. So if you're confused by anything that I outlined in my chicken scratches that I put on all of those charts, they'll become completely transparent in the manual, the book, along with, I think I mentioned before, like a market wrap. So that essentially is outlining all of our trades and why we got in, why we got out. It's not just saying, oh, the strategy's picked it up, so just follow our instructions. We say how the strategy picked it up, why, like where we anticipate, or where the strategy anticipates it's going to go, when we're going to get out, why we're continuing to hold. We try to be as transparent with you as possible, because we take pride in this service not only being an advisory service, but also an educational services. We want to teach you how to trade. We want to teach you how to trade like Rob, but the only way to do that is to teach you how to do that, to be open to questions. So yeah, like I said, we take a lot of pride in educating people in this strategy.
And then just talk about the weekly wrap, and that's like
Oh
a
yeah,
newsletter that you put out, correct?
I got a little bit ahead of myself. I didn't read that fifth bullet point. Yeah. Once again, the market wrap. So we we give a general overview of the market in the market wrap, along with we provide each trade that we got into that week, and each trade that we're still holding that week from the previous week or previous weeks. We include it in that market wrap when we explain why we're continuing to hold that position, why if we exited, why we exited. We list the profit, and we also like give our thoughts on where the system indicates that the stock is going to go. So we use the market wrap to bring transparency to the investors, so that, or to the subscribers, so that they understand where their money is going, how it's moving, and so they're not in the dark. We never want you guys to be in the dark with where your money is going. So that's the goal of the market wrap. It's exactly as it says. It's a detailed overview of the system and what's going on.
All right, and then you get access to the third-party registered brokers. Again, that's an option for those if you don't have time to execute these trades yourself. Maybe you're running your own business, or whatever the case might be. You're working a full-time job. There are third-party registered licensed brokers that do execute these trades on behalf of clients, so that, like I said, it can be completely hands-free if you want that. And then finally, you get access to us here at FFR Trading and our team here. And FFR, we have over 20 different strategies. All have been vetted, just like the strategy, the six-figure slide system we're looking at today. So we can build you a portfolio of strategies, right? So that helps mitigate the risk, right? Improves the or smooths out the equity curve. And it allows you to participate in non-correlated markets. So maybe you might have one of our futures programs running alongside your six-figure slide service. So you've got an option service that's based on stocks, and you've got a commodities program that's uncorrelated. All right, so we can help you build those portfolios here at FFR for you. All right, some questions as we begin to wrap up here. Everyone is here for a reason. I'm going to turn my camera on back here, just so I can talk to you guys. So, everybody came here for a reason, right? You're looking for a way to generate monthly income, or maybe you're looking to build that retirement for yourself, and a few percent in a mutual fund isn't going to cut it. If you got 10 years left before you retire, you need to do something different, right? Maybe you're looking for, a trusted source where you can learn to trade, and you'd like to earn some income while you're learning. Maybe you don't have time, like we talked about, you don't have time to do this yourself, or you don't have the expertise to do this yourself. Well, our goal today was hopefully to provide a potential solution for you to consider, right? And let me show you what we've got to offer you guys today. Because this system has just been released to our clients here at FFR Trading, right? We have been promoting this at a special introductory price, and we've gotten tremendous response. Obviously, the people that are involved in the program are extremely happy. You can see if they've had 4 losing trades so far this year, and those losses have been small. Those folks are pretty happy. The standard lease for this program, a 1-year program, is going to be $7,000. You are not going to pay $7,000 if you act today. We're going to extend this introductory offer for those that call in today. You have to call today to qualify. All right, this is not for everybody, so we do have to ask you some questions to make sure this is a good fit for you. But if you do qualify, you give us a call, we qualify you, you can lock in this introductory price, all right, and you'll be, believe me, some of the trades that we've seen, a couple of trades can completely pay for this service. So I'm going to put up the numbers here that you guys need to call in. All right, if you're here in the US, you can use the 800-883-0524 number. If you're outside the US, the 832-404-2420 number. You can email us at support@ffrtrading.com as well. Those of you that had questions that we didn't get to, you can go ahead and give us a call. We can get those questions answered. We can go over the trade by trade detail, the summary, you know, whatever you need to see, we can do that for you. And Jake, one of the things I just kind of wanted to ask you, what if I'm somebody that's looking at this program now, why should I consider the six-figure slide system?
I'd say that for people that not only want other people to trade their money for them, but also want to learn how to trade, my biggest advice to people is to never, if you don't know how to trade, always just give your money to somebody who does and have them trade it for you. But this system, not only can you do that, but it also teaches you how to trade. Like I said before, we take a lot of pride into teaching people how to trade this service. And one key thing that you can take away from it is learning how to trade like Rob. Once again, I've been with him for half a decade, and I've gotten more experience than I would have in 4 times that time because of the education I was able to receive from these kinds of strategies and the transparency that Rob brings to the table and how he's trading.
So guys, give a call, 800-883-0524. We got to ask you a few questions. Like I said, got to make sure it's a good fit for you. If it is, we'll go through the program, all the details, so you know everything in and out, everything is in writing, and get started. Here's a question from Joan, and it is a good question, so I'm going to pass it along to you, Jake. Why is it called the slide system?
Why is it called the slide system? That was actually inspired from the last wave pattern. Like I said, it's the bread and butter of the service. And after it makes that fourth swing, I showed in the chart, it drops down hard. You know, you climb the slide. That's what those swings are. You climb the slide, and then after you hit the top of that slide, there's only one way to get off that slide, and that's to go straight back down. And that's exactly what the system takes advantage of.
All right, awesome. So excellent question, Joan. Thank you for posing that one. All right, guys, like I said, this is today only. The price is going up after today. If you want to get that promotional pricing, give us a call, or you can email us, support@ffrtrading.com, and we'll get with you. One of the account strategists will get in touch with you and go over all the points of the program, make sure it's a good fit for you, and get you taken care of there. So I think we're ready to wrap up here. Jake, we really appreciate you coming in. This was great. Was really excited to bring this program to our clients here at FFR, and you've got a tremendous winner here. You're knocking it out of the park, and we look forward to having some great success with our clients here at FFR and your program there with the Rob Ebels team. So guys, again, just give that number a call. Don't have a lot of time left, so depending on where you are, I'm on the East Coast, so it's just after 5:40 Eastern time here. Call and figure out if this is a good fit for you, and we'll get you started and start making some money. All right, guys, take care. Have a great rest of your trading week, and we'll see you all on the next webinar. Take care.
Thank you, guys.